Hello everyone, welcome to TTT Markets. In this video, we are going to discuss how to read price action without indicators. After watching this video, you will understand how to read the markets. You will be like the chart whisperer without using any kind of indicators. And you might say, is this possible? No MAs, no MACDs? Well, let me go to the chart and show you. So this is the Euro USD chart, as you can see right here, and this is the daily time frame. Now you might be asking yourself, how is this possible? If I don't use moving average, if I don't use the MACD, the stochastic market profile, or any other kind of indicator, how can you possibly have a trading setup? How are you going to get a trading signal? How will you know where to place your stop? So allow me to tell you how to do this. And this is not rocket science. This is not something new. We are not reinventing the wheel here. This is something that was also happening in the past, before computers, before charting platforms, before technical analysis. People were using this kind of methodology to understand where to enter, exit, take profits, and so on. I'm going to describe now the steps one by one. Step number one, move to a larger time frame. Do not begin with daily or 4 hours or 1 hour. Begin with the bigger picture. So you go here and you choose weekly. And what you will do is you will zoom out a little bit. So let me sort out the chart so you can see what I mean. So you move to weekly and you zoom out. And you do this and so you can see the big picture. So this is it. So this is the weekly chart on Euro USD from 2008 when we had this peak up until now. So this allows you to start answering certain questions like, what is the structure of a market? This is the first question you ask yourself. What is the structure? Is the market trending? Is the market moving sideways? Are we in a downward channel? Are we in an upward channel? Are we near any important support or resistance? For example, are we near a multi-year low or high? So you ask these big questions. And another thing I should add is, do we have any important trend lines? Trend lines are okay. You don't use indicators, no moving averages, nothing. And I'm going to tell you a big secret in a few minutes. So let's do this. What happens with the trend? Overall, you can see for the last many years, price action is moving to the downside. That is on a very large time frame. However, since January, since the beginning of this year, price is moving up. What is the bigger structure though? Are we inside a channel? Is there a hidden pattern? Is there a hidden pattern that we don't see? Let's start using trend lines. So this is obvious. I don't think I need to explain this. So this is one very important trend line. And this is another very important trend line. And what do you get now from this? Remember, number one, what is the structure of the market? So now that we have the trend lines in place, we ask ourselves, what is the structure of the market? Remember, this is the number one question. What is the structure of the market? Is there a hidden pattern there that we don't see? Well, right now it starts looking better, isn't it? Remember, without indicators, and now we get a feel where is expensive and where is cheap. For example, up here, the euro is maybe a little bit expensive. Down here, it is a little bit more, I'm not going to say cheap. I think I'm going to say it has more value. So what have you achieved right now? You know the areas that you can do business. What do I mean by this? I'm using content and I'm using principles from auction market theory that suggests that price action, the markets, is nothing more than a big auction. And there are people who buy, there are people who sell, but there are certain levels that the buyers are not interested. There are certain levels that the sellers are not interested. Equally, there are levels that it is very important, it is extremely advantageous for the sellers to do business, and it is extremely important for the buyers to do business. They have an advantage doing business in that area. Would you like to guess which area is important for the sellers? Do you think it is down here? Big sellers, those that have a very negative view about the euro, do you think they will start selling down here, just below 0.5? Absolutely not. They will prefer to engage over here in this area. At the same time, the buyers, if we drop to this trend line support, if we drop to 1.05, 1.06, they are more keen to intervene and buy the euro. So what we have achieved now, remember, question number one, what is the structure? Where to do business? Sellers have an interest to do business up here. Buyers have an interest to do business down here. And maybe in the middle, it's 50-50 to go either way. So you don't want to do business in the middle because it can go either way. You wish to do business from the extreme. So now we have identified the structure. We move a little bit closer. Let's define now smaller areas like this, smaller structures like this. What do we see here? I see this. So this is, remember, the weekly chart. And I'm going to use a trend line, and I'm going to do this. And also, I'm going to do that. So this is, let me sort this, okay. So we have a range, an horizontal price action up there in the highs. The price is moving up, moving down, moving up, moving down. So there is a little bit of zigzag inside here. No one is having the upper hand. Not the buyers, not the sellers. They are looking for information before the euro either breaking to the upside or breaking to the downside. So now I know where I'm supposed to do business. I have defined my range, and I think I can safely add one more trend line, which is this one. So this is the big trend of 2025. So I have done all this on the weekly chart, and now I will move on the daily. So I'm moving on the daily. There you go. And look what we have. We have, number one, the range we are doing business. We have the trend line. The very first thing we discussed was about the structure of the market. And what we did on the weekly, we are now going to do on the daily. What I mean by this, we define the highs and the lows, the structure. Who has an interest to do business, to trade at the highs? The sellers have an advantage, so it is more likely that they will take over at the highs of the range. Who is doing business at the bottom of the range? The buyers. However, please note we have broken the trend line of 2025. This is extremely important and something to pay attention. So have you seen what I have done so far? I'm defining my ranges and the areas where I wish to get involved without using indicators. For example, after it broke down to this trend line, you don't need to catch the breakout. Maybe this is also a little bit dangerous because it can be a fake breakout, then it can move back up. So what I do is I wait, and then when it comes back up to test the resistance, this is the best area. Remember, highs for the sellers, lows for the buyers. So this is the best level for me to do business. So now I have a range. I know this level, 1580, 1590, is very important for the buyers. If this doesn't hold, it opens up the trend for lower valuations. So I'm defining again the structure on the daily. Then I will move to the 4 hour. And this is as far as I will go when it comes to the structure. I will not move to 1 hour or 30 minutes. Now I am using 4-hour time frame. Remember what we did before when we were defining the structure on the weekly, on the daily. And look what appears. We have this on the 4-hour. Now I'm going to ask you again, where are we doing business? So remember, this appeared, we connect these 2 points. You need to go ahead and review and find out more. How do you draw a trend line? A trend line, what you do is you need to connect 2 important levels. You don't connect any point you like or any point that fits your analysis. So you go to the highest level, for example, if you draw a trend line to the downside, you do this and you move it until it reaches the first point. The first point it meets, you stop. So you did this on the 1st of October. You see this consolidation right here. There is a trend line. We are outside the major trend line of 2025. We are close to the highs on the weekly time frame, so this is the area that the sellers are going to be a little bit more aggressive. What do you think is more likely to happen? What is the bias? Can you see that I'm not talking about guaranteed outcomes? I'm speaking about probability outcomes. So yes, you guessed correctly. Let me take a short with a stop above. You can place the stop there if you are trading on a smaller time frame, or above this level if you are going for a bigger correction lower. One thing you can do, let me find it though, and it is very nice for here on TradingView, you can use this. So if you sell, let's say here, you place the stop above. So I will move the stop over here, and my target, where is my target? My target is going to be to the bottom of the range. So how much am I going for now? So I'm going to make about 1.34%, while my stop loss is 0.47. It's 3 times, is it? Yeah, it's 2.86. So that's nice. The reward is 2.86 times, almost 3 times larger than the stop. So that's nice. And you can see this is done. Can you see how from the beginning, how I built my bias? Without using indicators, without using anything else like stochastic oscillator, MACD, nothing at all. Just using trend lines and the price itself, how I'm building bias. So you wait, you define firstly the structure on a larger time frame, then you move to the daily, then you move to the 4-hour, you identify important trend lines. You don't have to do it. You don't have to connect every single trend line you see, only the major ones, but you will succeed in this if you start from a larger time frame and start moving down. So this is like a top-down analysis, the same thing that we do in global macro. Now, if you wish to look at it from a larger perspective, move to a larger time frame. Maybe you are the kind of trader that says, well, I wish to wait until this breaks or doesn't break. Okay, but if you trade smaller time frames and you wish to pass a prop challenge, then I suggest you start with the weekly, you move to the daily, and then you move to the 4-hour. When you become very good at this, and you don't need to have trend lines all over the place. Remember what we say, analysis paralysis. Just identify the structure and then define the major trend lines and build a bias. Then, using a 4-hour time frame, you can get, depending what kind of currencies you are looking at, you can get 2, 3, maybe 4 major opportunities during the week. Somebody asked, can you break this into a lower time frame? Of course you can. We can break this down to 1 hour, even 30 minutes. Or you can start to look at 15 minutes, 30 minutes. But here is the problem. The smaller the time frame, the bigger the noise. You are going to have more noise. That means more choppy action, more fake action. So if you use at least 4 hours. That's my personal minimum. You are kind of filtering out the noise, unnecessary choppy moves that will only confuse you. Of course, if you reach a level and you are very good at this and you are understanding the concepts, perhaps you can do this. But I'm a professional trader and I can tell you I'm not moving below 4 hours, because especially these days, with all the news, with all the political news, it can get so choppy and we can get so much noise when it comes to price action. Some of you are scalpers. So let me define this now. What I am showing you here is optimal for swing traders. So this is a very nice approach if you are a swing trader. But someone might say, well, I am a scalper. Can I apply this if I am a scalper? Again, yes, you can. If you are a scalper, you can move to a smaller time frame. For example, this is 1 hour, but I guess you can move to 15 minutes, 5 minutes. There you go. But still, if you are a scalper, it means you need to be even more disciplined and you need to be very accurate with your entry and your stop. So it is making this a larger necessity to define the areas very good. So for example, look earlier, after we defined the trend line here, look every time it touches this. So remember, this is the 15-minute sell. Take the profit you want. I don't know, 5, 10 pips, 6 pips, 7, whatever your trading plan says, stop above. It goes here, sell again, take some, maybe you're stopped out here, but sell again, it moves back below again. Look, sell, keep selling. So even if you are a scalper, this can work. Let me now do a quick example for the buy side, for buyers. So let me go again to weekly, but this time I'm going to delete this, sorry. I'm going to use the dollar yen. So I'm going to choose USD JPY. I have some trend lines from before, and the tactic, let me get rid of this. Again, we are using the same approach. Step number 1, use the weekly chart. Step number 2, what is the structure of the market? Where are we doing business? I need to define this very good. So this is something that I was doing in the past, I was doing before. So can you see it's exactly the same principle? Again, let me get rid of this. Where am I doing business? Major trend line. This is resistance. I'm going to expand this. So this was before. This didn't work. So it means I'm getting stopped here. Where is my next level? Is over here to sell. But where I was going to buy? Structure. This is the low. I connect the second low, as I told you. Where am I doing business again? Look, it comes right here. And who has an interest to do business right here on the trend line? The buyers. Now I move to the daily. Look what happened after we approached this area. Now I am looking also at the candlestick. Look at this candlestick. It approached, and I think I should sort out the trend line. Let me delete this and redraw this again on the daily so you can see better. So this is my trend line. I'm connecting these 2 points, and here it comes, it touches this exactly. And now look the kind of candlestick I have on the daily. A very bullish candle. Do you agree? By the way, candlesticks and candlestick patterns, they do work if you do them at the right areas. If you look, for example, inside here, when the market is balanced, no one has the upper hand, it is going to give you nothing. You are not going to make anything out of this. But here, it is important. Now I will move to the 4 hour, as I was telling you. And what do I see? Very aggressive candlestick. Can you see? So this is a safe place to buy. Have my stop, so for a buy. Sorry, this one, long position. Perhaps you decide to buy a break of this candle. Stop outside. The target is the upper range, which is somewhere there. So here, how much do you go for? You go for about 1.5. The stop is this, the red area, the green area. The green area is 1.5 times larger than the stop loss area. So which is fine, which is good. So this is how we do this without using any kind of indicators, nothing at all. We have a very specific method where we define, again, the structure of the market, and then we identify the trend, we draw our trend lines, and we don't try to guess what is going to happen next. Do you realize that we are not doing this? We are not saying, oh, is the euro going to go up or down, or is the dollar yen going to move up or down? We don't worry about this. We are asking ourselves, where do we have an interest to do business? Where do buyers have an interest to do business? Where do the sellers have an interest to do business? This is the only thing we ask. So this is the methodology we wanted to show you, how to trade without using indicators, and we are certain that this is going to help you in your prop challenges. Thank you for watching. See you in the next video.